Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, October 11th, 2022. The days do continue to be very interesting, and I'm going to interpret, we're going to start right on the hourly chart. We're starting with the NASDAQ. I'm basically just taking a review of today against expectations and against what is kind of happening in that outer ring, so to speak, of what's affecting what is coming in. So I continue to track the decline, which began off of last Wednesday's Globex, very early in Globex high at 11,740. No, actually it was 11,729, excuse me. So from that level where I put minor wave 2, we've been involved in a minor third wave. So today, actually, and also would have been early in our session, we reached a low at 10,788, and then the market rallied strongly. And so this minute one, which I kept believing was likely complete there, actually went one bit more, and I believe that's where it completes. Then we already got that minute 2, and then the start again. Now, this is happening much quicker. This did not get, I believe it may have gotten within an acceptable range. So again, I mean, look, I doubt it, but we're going to take a look. Well, it did actually, but it came absolute bare minimum, which was 0.236. The most average for a wave 2 is 50 to 62%, which put us up into here. And we were looking, okay, we'll give a minimum of 38.2%, which was 11,150-ish. But it came in much lower. It got above 11,000, but it stopped at 11,039, and then took a nosedive. And the nosedive was in reaction to the Bank of England laying it on the line to all of these pension funds, which hold long gilts. Gilts are their long-term bonds. And there's just been, it's a disaster. And so it's affecting the pound, it's affecting many different aspects, and it's really putting pressure on pensions that are being supplied to a vast number of the population of the UK. So it's creating a lot of damage, but they were given the choice that they need to cover. They need to cover their positions or pay up, or they'll be liquidated, and they can't liquidate them. So the pensions have to do one or the other, and they're giving them 3 days in which to complete it. Well, that just kind of upturned everything. And again, we'll see how the UK markets do tomorrow, and they do have an effect on us at the moment. So what I'm kind of putting together is like, if we really did do minute 1 and got a minute 2 and it came in that short, then because the NASDAQ did then go down and create an additional low, not a great deal, but it did create an additional low at 767, and that would have been right at about 3 o'clock Eastern, and then rallied into the bell, and then rallied after the bell, and actually is kind of just futzing around, pretty much like a break even according to for the NASDAQ, and it's up about 28, but that can disappear quickly. In any case, what it is telling me is that the expected bounces technically are not being met. So on a technical basis, they're not being met. Well, what's the message? Because I would say that this didn't really meet. These are falling short of expectations, which are the norm for an overall. It begins to show us that there really is weakness. And where the weakness is showing up is that the buyers aren't coming in, but they're selective. Today, a lot of this rally into the close and during the day that took us up to that high was based in the biotech sector, from what I noticed. That was the sector that just kind of got lit on fire and people were switching over. And so I don't know if they were selling tech and switching over to biotech. Who knows? But in any case, the numbers are the numbers and the chart is the chart. So in order to kind of take into place all of that, we have enough going on globally. We have enough going on here in our own country with the economy, with inflation, with interest rates, with the dollar, with earnings, et cetera, et cetera, et cetera, plus the outlook. What is that fourth quarter going to really look like now? Are we really beginning to discount the fourth quarter? Are we going to start pricing it in? And I think a lot of that will come out from the earnings that we're looking into now. And again, I don't purposely try to put it all in, but I can relate it to the wave count. Elliott has continued to really demonstrate and show that off of those all-time highs, we've been involved in a longer-term, stronger decline and a corrective phase. And I've laid out some of the parameters, but it continues to hold. Now, some of the nuances of the very near-term picture are very fluid. And we have to be fluid to the overall. Now, the overall picture continues to suggest lower. How we get there is now what we're trying to do battle with, and it's day by day by day. But the general turn continues. The trend is continuing to be down. We are getting nice rallies, and they are being based on a whole litany of things. But in reality, our technical picture is now getting a little knocked because it didn't go to the minimum. Didn't even get close. Now, I have to think because we went down and made a new low, but then took it back and then rallied. We do run the possibility that this is one, and that's A, that's B, and we're going to get back up here tomorrow or overnight. Because tomorrow we have PPI. And so that obviously depends on how they want to look at it, depends on what expectations are and how that gets interpreted. All I need to know is you can choose direction. If you want to pin it on that, fine. But then I would be looking for upside if they want to love it. And since this is a wave 2, we still run the potential that it'll get up to 11,150 or even 11,200 to 260. Now that is where we have right here, it ran into the 50s, the SMA and the EMA hourly 50 and moving average, 50-period moving average. And then it got stuck and it went all the way back and now it's heading back towards it, but we'll see. We have to leave that open as a potential and a possibility, okay? Then that 2 would just shift over. But it could actually, if it's going to move, it could go a little bit above that level and it still would be 100% acceptable. In fact, it can go to here and still be just this small wave 2, and then we'll go timble and tumble. Now, again, balance that out how we may, but I'm going on that PPI numbers coming out no matter what tomorrow. So here's the deal. If they hate it, then we do have downside and we're going in a third. And I would expect it to go quickly, fast, and vicious. Just boom, similar to what we've already seen. So how do we react? Sometimes these numbers, it's like they may try to buy it, but it gets smacked so hard that the downticks are in $50, 50 NASDAQ dollars at a crack because it's going so fast. So we get that again, but bigger. So this is a one that could drive us down. Now I know against that larger count that this primary C wave can get pretty ugly and really come in much, much larger than generalized expectations for this degree against its A wave. So it's a primary A wave being compared to an ongoing primary C wave. And that's where I'm pulling a lot of the numbers. And we've already gone pretty far past that the C wave would be equal to wave A. I believe that's already gone. Excuse me. So we continue to but I'm looking at this against what I see still having to come in without any solutions to the existing. The existing conversation is that the Fed will pivot. Well, there's absolutely no reason to think that that's what's going to happen. There are no signs that what they've done thus far is having any effect on inflation. That becomes real tomorrow and Thursday when we get PPI and CPI. That will be real. So it's no longer a pundit conversation. It's no longer a discussion because there are the facts. And the last time that happened, the market attempted on the very first trade to follow the leader, and somebody tried to buy it hoping that others would follow. Didn't work. And it collapsed. And if we get that tomorrow, well, I think it should be in the same manner, and it'll go quickly because of the buildup to, oh, this is real. Inflation is real. The Fed is behind. In terms of raising the rates to control inflation, they are way behind. They started too late. I don't think they ignored it, but they tried to make it transitory, which is like, I don't see how you can continue to do that because you can't continue to print money cheap because you're going to get left holding the bag. So in any case, here we are. Now, it takes time, so we're there. So tomorrow, here in the NASDAQ, we have the potential that it's going to rise, that the PPI figure will be somewhat agreeable to the market. It might be an instantaneous jump. We don't know where the market will be at that particular point. So we have to allow for pop higher to go above 11,015, getting up closer to 11,150. That would still keep it in the category of a minute wave 2, setting the stage for the next third wave down to begin. So we're just breaking it all down, building blocks. Please remember that. The smaller the degree, a little bit smaller will the move, but it adds up very quickly. And you'll see that these larger degree moves are much bigger. So I'm building this whole third wave because it's subdividing and it continues to subdivide. But the generalized trend is down, and for good reason. And those reasons haven't changed. They just continue to build the pressure to continue to move it lower. So on the back of this week, we have PPI, CPI retail sales, the Wednesday, Thursday, Friday. Then we begin the earnings. And first out of the gate is kind of switched up a little bit. I believe it's now banks, it's financial sector. So it'll be interesting. And that's supposed to set the tone. So we shall see. Particularly when you've got the chairman and CEO of JP Morgan out there tooting that, yeah, the US is going to go into recession likely in 2023. The stock market, the equity market can clip another 20%. Take it off. So when you're looking at that from current levels, let's just say because we trade the NASDAQ, and the NASDAQ right at this moment is trading at 10,862s. That's what I'm going to say. And you just times that by 20%, you're talking about another 2,172 points. That's just what Jamie Dimon's estimate is. So Jamie's Dimon's estimate is taking us to the low of what I'm projecting as cycle wave A. And then we get a cycle wave B rally, and it'll be a kick-ass rally, and it's going to take everybody by surprise, and it's just going to go. And I wouldn't be surprised, since we've already got that trigger now, JP Morgan's got a trigger down 20%. Bingo. There's your point. but it's going to be fun getting down there. So I continue to look for the overall moves to take us down to those levels. And right now, again, even if we're saying 10,862 minus 2180, we're going to round everything up. We're looking at 8682. And I have numbers that go down towards the 8,000 level. So it's all there. So saith the chairman and CEO of JP Morgan. Over in the S&P, it's going to be the same stories, except the S&P did not go to a new low today, which again leaves open that probability or possibility of a continued rally back up towards 3652 here, or 3650 in the S&P. Now we could run that same from there down to there. Come on. So we're still looking like we could get, they got to the minimum, but they got a little bit better at the S&P. So 3671, 72, 3670. Actually, you say 3665, 3675, given a little $10 room window. Above all of that, we have the EMA and the SMA on the 200, the hourly 200. And those are beginning at like 3694 up to 3700. So we have a possibility we can go revisit 3700 if they really love this PPI number tomorrow. Yeah, it could go there and then turn again. Or it can be a flat because it looks pretty flat right now. There's the A, that would be the B, and we're looking for a C not to get much further than 3650-ish. And then turn. So again, leaving room, they may do that overnight. And then we get the number itself and it just drives the market lower. Or we get close, we do it, they try to buy it, mistake, boom, and it gets crucified. So downside remains very real for the S&P. Now, I want to take that off. I'm going to put, oh, by the way, we can run that same number. Let's just see. Jamie Dimon talking about 3,600, we're going to say. Another 20% is 720 points. So let's just do the math. That's 2880. 2880. I've got 3,200 down to, I believe, 2880. So saith the chairman and CEO of JP Morgan. That's where he believes the United States and the equity markets are going to go. So for tomorrow here, and if we're looking at what this all could look like, first thing I can do, I can start, if we're just looking for a smaller move, right, which we are in terms of the whole picture. So let's take a peek. If that is the end of 2, and we don't like that CPI number, and they start to turn it without going above this level, we have support all the way down, basically, for a small third. We have 3533, 3505, so 3500, 3484 to 3465, but where wave 3 would be equal to wave 1 would be 3414. We go a little bit further, clean up, we're down at 3350, and I think that's not unreal. Can it happen all in one day? Probably not. In fact, I don't remember the S&P. I'm sure it was back in the pandemic, and then once before that, there was a couple of things that it could have done. So possibly, I mean, dropping from a high level all the way down, but obviously we're off of all-time highs. So to see that the S&P in one day, I know it's done it, I believe in August of 2016, I think it did it. But we had some wild days where the Dow was down 1,700 and 2,000 and blah, blah, blah. So is it possible? Yes. But you really are looking at something pretty severe. Now, we have done those types of moves. We really have. And I'm just going to open this up because they've been pretty recent. The most recent being last Friday. And this was on the employment situation, they call it. So now they're printing out that the deficit fell by 1.4 trillion in fiscal year 2020. The CBO estimates. Okay. Yeah, put out that good news. I don't think so. In any case, we have support all the way down for a third. I would think that we kind of get into there, finish the 3, put in a 4, do a 5, and that's just going to be minor 3. So minor 3, actually, yeah, minor 3 will finish probably about 1.618. So I would think 3260, 3250, maybe as low as 3200, and then we bounce in a minor 4 before we do a minor 5, and then that completes the intermediate third. I do think that that's going to be the thing. We have enough reality now, I think, peering down at the markets as to what fair value is. So again, what I refer to is like all we're doing is like the market just is on a hunt for value. And that value is where transactions can happen, where volume can take place, where traders can trade. So, it can get very comfortable. And if you're a day trader and you have to be trading the future, but it's not really trading in a wide enough range, yeah, you complain. But in reality, it's like where a lot of trades can happen and a lot of options can trade, and you can hedge it, and you can, everything works. So you'll see a market kind of hang out around there. So in any case, I didn't want to make this really long, so I apologize. So yes, we have the opportunity where we can swing back up, complete this, and then swing lower. Here are the points that would be of interest. So support, 100%, 34.14. I'd look for a little bit more. I want this third wave to remain the longest to take the pressure off of the count going into a fifth wave. Okay. That being said, upside we've covered, downside we've covered, and that's going to be it for today. And the next update will be on Wednesday, the 12th.